Big hearing this week on the GameStop trading frenzy. The CEOs of Robinhood, Citadel, Melvin Capital, Reddit, and Roaring Kitty Keith Gill will testify the controversy raising questions about the gamification of investing. I don't even know if that's a word, gamification. Regulation and the power of social media. Joining us now is Haley Sachs, founder and CEO of Mrs. Dow Jones. She has more than 300,000 followers across social media where she talks to millennials and Gen Z about the markets and investing. And Haley, if you could just think back right when the frenzy reached its peak or when it was beginning, and just tell us, were you at that point thinking this is great, or I'm worried about this at that point? Because I guess you were maybe somewhat torn. But a lot of people got involved, but I don't know if that's the right way to do it.
Look, I think that it was a really exciting time. It was great for ratings for CNBC, I'm sure, and great for interest in finance. But in the same way, there's a lack of education. And so it was a bit scary because you saw young people taking risks with their money that necessarily didn't make sense.
Right, because I remember at the time on Twitter, you can imagine, because people go off on Twitter, and I made one comment that this is investing ? Because it didn't look like investing at that point, and that caused a huge ruckus. People saying, "Who are you to decide what investing is?" But to watch a company that I don't know what the prospects are. Saturday Night Live did a skit on the prospects for GameStop, but obviously going from single digits to 400 or 500, I don't know what that is exactly. I don't know. I guess it's investing, but you see my point, and I'm not sure that's the way that people should be exposed to Graham and Dodd type building wealth for retirement in the stock market.
Absolutely. And look, gamification is when you apply game mechanics into non-game environments, such as the stock market. And like with all games, there is always a loser. And so you saw day trading explode during the pandemic because people were at home and they were bored. And in one way, it was great because it propelled interest into the markets and into financial literacy. But it was also extremely risky. I mean, you think about a chess match. Would you play chess if you didn't know the rules? Investing is not a game.
So how would you, there's going to be a hearing. What would you like to come out of the hearing in terms of just more education? Do you think a stronger touch on regulation would be a positive or a negative for this nascent, Reddit-fueled sort of education of all these millennials?
Look, it's up to Capitol Hill to decide what regulations make sense. But I will say that with this crop of young investors should come new regulations, and the SEC and FINRA need to level up. I mean, for example, when Robinhood halted trading, that disrupted the whole market. That cannot happen. Right.
But we now know that they didn't really have much choice based on liquidity and solvency of their, that wasn't regulation. That was sort of survival for Robinhood.
Absolutely. But why were they in that position?
Right. Well,
Shepard Smith here. Thanks for watching CNBC on YouTube.